Morning all. Update for Tuesday the 5th of March. I'm looking at the dollar yen. You can see we've had a really good climb. Well, ever since the beginning of the year. It's been a slow but steady climb with a pause here, but then we broke above the 100 and 200 day moving averages, which were obviously providing some sort of barrier. Now we're testing the upper trend line of this channel, which we bumped into yesterday at 112.00 and reversed. We've got a doji there from yesterday. I'll probably open this up a bit. That'll be a bit easier for you to see. We've got a doji there from yesterday, just showing a bit of indecision. I can't say this is the best selling opportunity that I've seen, but I should make you aware that in the sort of 112.10, 112.00, 112.10 region, we do have this trend line. It's only a month and a half old, so it's not particularly strong, but we do have the 200-week moving average dipping slowly towards the low 112 area as well. It's now around 112.32 according to my chart. So worth paying attention to the fact that we are hitting some resistance in the dollar yen, just in case you are long. If we reverse, then I would suggest the first target on the downside would be around the 111.40, 111.30 area, which is this convergence of 100 and 200 day moving averages. If we then break below 111.00, we could reach 110.80, 110.70 for profit taking on any short positions. Euro yen has also hit resistance. We've got, let me see, I'm just checking this, a high on Friday at 127.50. We've got a high yesterday at 127.40. So you can't call that an engulfing candle, but it is quite a big red bodied candle anyway. Now, it's not too clear, but there's a peak here in November. I've joined that peak to the peaks here in the middle of December, and it's given us this trend line that cuts in here. And we've also got the much shorter term trend line, about 2 months old, coming up here. So you can see that that trend line's at 112.48. The lower trend line's at 112. What is it now? 112.28. So within that 28.48 band, that was resistance, and we seem to have reversed from there. 100 day moving average didn't do an awful lot on the way up, but we're hovering around it now. So I guess if we hold below that 100 day moving average, which is at 126.75, that would reinforce yesterday's more negative price action. We are overbought, and we do need to see a small correction at least to ease those overbought conditions. More importantly, on the weekly chart, we've got the 200-week moving average at 127.26. So we topped just not too much, 15 pips above there. So that does look like there could be some downside pressure for the euro yen and possibly even the dollar yen. The Canadian dollar versus the yen already peaked at a 2-month trend line, as you can see right here, with a negative candle, shooting star type candle. And again, testing the 100 day moving average, which is at 83.93. We've got trend line support down at 83.58. So a break below 83.50 would be quite negative for this pair. Okay, the pound versus the yen's got a trend line going back to September, joining the September and November peaks. We have reversed from just below there. We couldn't beat the we topped out at 148.45. Yeah, we hit that yesterday, in fact. So we've got quite a negative candle there. You can call that an engulfing candle, which is followed two dojis, which in themselves are sort of uncertainty, showing that the bears are running out of steam. Now we've got this big red candle, which can act as a sell signal, and this all happens just below the 500-week moving average at 148.48, which of course we didn't quite get to. We got to 148.56 last week. So again, this is further evidence to back up potential rally in the yen. We've looked at the Canadian dollar versus the yen. Let's look at the US dollar against the Canadian dollar. We've got a good rally off the 200 day moving average. We broke above the 100 day moving average, so that looks positive. We've got less important support from this 1.5 month trend line here, which comes in at 133.12. So we're pushing above that now. We were stopped by the upper Bollinger Band, but I wouldn't worry about that too much. That will widen out if we start to move higher. So let's see if we can break the February high at 133.40. Remind me, where did we get yesterday? 133.39. Okay, so that is holding the February high. But again, I don't think that's going to be too much of a block. I think we can get through that. Then all we need to get through is a 133.74 high in late January. It looks pretty good on the daily chart. I think we can finally get a move to the upside. We've already seen strong bounces. What is more important on the weekly chart, this trend line going back over a year. So this looks good. We bounced off the 200-week moving average. So on the weekly chart, this certainly looks positive. And on the daily chart, I think those resistances are relatively minor. So if you're not long, watch. Well, certainly being long above the 100 day moving average looks good. And of course, a break above 133.40 is going to look good today. And a break above 133.75 is going to look even better. The dollar's bounced off, well, above the trend line going back to September and the 200-week moving average, the dollar index. So we had quite a bullish candle here with that hammer formation, and then we pushed up back up through the 100-day moving average. So there's no reason why the US dollar index can't go higher. There's nothing really in the way of it. So that kind of backs up the theory of a stronger dollar against the Canadian dollar. Just remind you that we're still looking at this head and shoulders pattern on the dollar index on the daily chart, but unless the neckline is broken, it's not valid, which was one reason why I said you don't want to sell this speculating. You want to wait until the sell signal is confirmed, and obviously it wasn't confirmed, and the dollar looks to strengthen perhaps into the end of the week. That dollar strength has certainly been seen with a weaker gold price, gold collapsing against the dollar, which was exactly as we had expected. That was pretty much that was the trade of the week last week, along with being short silver. So yesterday we were lower again. We were having a little bit of a pause. We've got very strong support down at 1275, 1272, well, 1273. 1276, 1273, let's call it that 3-point band. We've got the decent confluence on the Fibonacci's as they overlap. We've got support from the price action with the lows in January. As you can see, we bounced off that mid $1270 area, $12.75 area many times, and we've also got the 500-day moving average at 12.73. So I would suggest it's worth a long there. We've got the rising 100-day moving average at 12.65, so we'd have to break below there before you'd want to be short again, or at least you want to have your stop just below there. I talked about support from the 200 and 100-day moving averages in silver. The 100-day moving average seemed to hold it. We got down as low as 1502, so we overran that 100-day moving average just by a fraction. We've got the 100-day moving average at 1504 and change. So the question is now, do we bounce back above the 200-day moving average, which is at 1516, or do we just trade sideways for a while? I'm not really sure. I'm cautious about longs. We're not severely oversold, and we do have this double top pattern. So I think longs are still a little bit risky, but if you were looking for anywhere to buy, then as I say, within this 10-point range would be the place to try, and so far it is holding. We've been trying longs in the dollar versus the Swedish krona after we broke out of this, what would you call it? Triangle pattern, maybe. I was really happy with this trade. For some reason, I took my profit yesterday. We're not overbought. We do have a very much diverging stochastic, though, which is a very minor concern. I'm just looking at the short-term charts where we are becoming overbought. Look at the daily chart where we're overbought there. So I just thought, I've got a good profit. Why don't I just take it? There's a slight concern about potential head and shoulders on the hourly chart. It's nowhere near formed yet, but this could be a right shoulder. This could be the head. This could be the left shoulder. Obviously, we haven't reversed yet, so I'm just speculating. I'm definitely not suggesting a short. We'd have to break the neckline all the way down here at 916 before I could talk about the completion of the pattern. I'm just being cautious. I've taken some profit. I definitely don't want to be short. If you're still holding longs, I wouldn't be afraid. We'll obviously have to get up through 137.50 for the next, for a chance to retest the high at 941.70. So yeah, as I say, I would still be comfortable being long. I'm just decided to take some profit. If we reverse, then I'll look for a buying opportunity on the downside. Pound's taken a bit of a beating against the Swiss. We were looking to buy on that break up, but we have reversed. I took my profit on that, which I'm sure you know about. Now I'm not sure what to do. This is a Fibonacci support on the short term, which I'm not going to bother to show you because I think the risk is that we come down here and test this trend line, which is around, okay, well anyway, it's around 130.80. I think 130.80, 130.70, well, you've got to try along down there. And the thing is, I think we could get there. So I'm just leaving this alone now. I'm going to wait and be patient and see if we actually do get down to 130.80, 130.70, and I'll be looking to jump in. Just to let you know, I have been looking at the euro pairs, the euro dollar, the euro Aussie, the euro CAD, and also the euro yen, and the euro versus the New Zealand dollar, and none of them are giving me any clue or giving me any signals for a decent trade opportunity. So the euro is absolutely dead, and I'm leaving it alone. However, my good friend Gavin has given me, asked me to look at the dollar versus the Norwegian krona, and this is quite interesting. Norwegian krona? I don't know what it's called. Norwegian, whatever it is. This is quite interesting. So we're clearly in a very strong bull trend, and we bounced off the 100-day moving average perfectly, pushed back above the 55-day moving average, which is the purple line. Now we're about to test the upper trend line of a 2-month trend line at around 868, 869. So this will be key. I think we can break it and continue the bull trend. So just watch that. We start breaking about above sort of 369, 370. This is going to look pretty positive. It's going to be a good breakout. We're trading in the direction of the trend, having already bounced off important support levels. We're certainly nowhere near overbought. This could be a nice little trading opportunity. We could run this up at least to 876, 878, and I don't see really why we can't retest the highs up here at 882.46. So that might be a nice little breakout trade if that's your thing. On the very short term chart, on the 1 hour chart, we've already seen a nice little breakout. We had some decent resistance here at the 38.2% fib at 859, 860. We had 500 hour moving average around that area. We had the trend line, which is only 2 weeks old, so nothing significant. But you can see once we beat that and then got through this little trend line here, we've really taken off. So this is certainly a positive signal, and I'm looking for that momentum to continue up through, what did I say, 869, 870 for the next buy signal.